Hey, what's up, guys? Sam here. And we're going to be doing the weekly review for the spookiest day of the year, 2025. So let's dive in here with SPY, as we always do. And towards the end of the video, I'm going to be showing you a trade that we closed today in the room on net, and a similar trade that I'm trying to set up on DDOG going into next week. So let's dive in here with the indexes. So first up is SPY. Still no changes. Weekly chart remains gorgeous. Daily chart remains gorgeous. If I could only point out one thing, is that this ATR, this 3 ATR on the weekly, is being hit, and that could potentially limit some upside. You know, maybe next week it'll expand a little bit more, give it a little bit more breathing room, but it's not trading at a discount. We can certainly say that. So I'm definitely not trading at a discount when it's hitting 3 ATR on the weekly chart. You can see it actually doesn't do that very often. It hasn't really done it more than right about here where it pulled back. So from a technical perspective, everything looks great, but that is kind of a limiting thing that I see there on the SPY chart, that it's hitting the 3 weekly ATR. Aside from that, everything here looks great, so I don't necessarily need to kind of opine on charts that are perfect. The only thing I would stress is, and this will probably make more sense towards the middle to later part of the video, is I don't necessarily want to get too long-term euphoric. I think that, if there's any kind of China deal that gets signed this weekend, which it's kind of shaping up that way, we'll see, we'll see what can fail there. But if there's any kind of China deal, like an official signing this weekend, which I think they alluded to, that might help things. But at least for myself, this is more of like short-term trading with controlled risk and giving myself lots of ways to win, right? So that comment will make a little bit more sense once I show you the net trade that we closed today, as well as the DDOG trade that I'm trying to do for next week. So aside from that, SPY's perfect. Let's go to the Qs. Qs are probably going to be equally pretty as they tend to be. So same thing, just more exaggerated. The last time that we hit 3 ATR, we've pulled back almost universally. So, mind your risk. People are certainly, foaming at the mouth in this market. We're above 3 ATR. Last time we hit 3 ATR was over here. Pretty big drop. We hit it here. Decent drop, right? So a little bit of a limiting kind of situation there, despite the fact that the chart looks fantastic. I don't see any issues on it. IV is pretty high, which is kind of interesting considering Mag 7 earnings have passed. But there's really not much to opine on this chart either. Just, it's perfect, but just mind the gap. Let's keep going. It'll get more interesting here in a bit, because I think the most interesting signal is going to be throwing back to that VIX signal. If you've been watching these Friday videos that I've been doing with you, I basically told you that the VIX was going to set up for Halloween. And here we are, last day of October. The best month of the year, and it's the last day of it. But that will make more sense once I show you what I'm looking at. So IWM here. Here's the thing with IWM. I really want to like this chart because the risk to reward here is very good. The one thing that I don't like, and what I mean by risk to reward is very good, is unlike the other indexes that we've looked at, this one is not at 3 ATR. The weekly is a max bull, right? So that's all very good. The daily has a large squeeze. It's not an optimal squeeze though, right? You see how this kind of looks like British teeth, right? They're kind of all over the place, right? It's a very jagged, crookedy smile, the type of smile you would see in the UK. So the squeeze isn't perfect, but this is a previous major high, and it's kind of just retesting it here at 244. Here's my major issue with IWM. IWM requires good market breadth. It requires good market participation. We've seen historically bad market participation into these new highs. In fact, I'm sure you've seen this everywhere, but it's kind of obligatory that I mention it because it came up in our trader call. A Hindenburg Omen triggered this week on the index. What does that mean? It means that the index made a new high, but the advancers to decliners was like historically bad, right? So basically what it tells you is you could potentially frame it as a facade, right? It looks good on the outside, but from the inside it's actually crumbling. And that mostly is going to be reflected in the IWM, right? So you have an index, the SPY and the Q that went up all week, and this one has basically fallen all week, right? So I did take a stab here on IWM for myself. It's a pretty small position overall. Somebody mentioned the 250 calls for January, and I thought that they were underpriced. They were around 850. So I took a stab with that. Is it an official trade? No. Will I make it an official trade? Not until I see breadth improve. But just a heads up, I did pick some of this up. The only reason that I picked this up, though, is because if I get in here, I'm wrong basically here, right? So this distance between where I'm in and where I'm wrong is small. Whereas if I was buying the Qs, I have to buy the Qs up here, and then I'm wrong down here, and this is a very large gap. However, until breadth improves, tech is the only game in town. So we'll see if that changes next week. Maybe it will. New week, new month. But IWM here, not favorable, not because the chart is bad. The chart is actually decent, and it's at a decent entry point. It's bad because the underlying structure and the mechanics of the market and participation, three ways of saying the same thing, it doesn't bode well for the IWM. It bodes for piling more cash into Google and Nvidia and Palantir and Tesla and all of those. But kind of interesting there on IWM. Let's move ahead to the HY to the G, which is going to be our metric for risk in the bond market. This is looking at credit spreads. The tighter the credit spreads, the higher this goes up. And this is kind of just a little bit of a nothing situation here, right? It's flat on the day, really hasn't done all that much. This is still favoring the bulls, so I would put, a slight point in the bulls' favor because of this. Certainly doesn't favor the bears, and it probably wouldn't favor the bears until he breaks 80. So for now, this slightly favors the bulls. If this could get a bigger bounce next week, I think that would actually help IWM quite a bit. As well as if interest rates could get a drop, TLT up, rates down, that would help IWM probably the most. IWM does not like what happened with interest rates this week, I don't think. Now let's move to the VIX. So here's where it gets a little spooky. And I'm wearing my Buc-ee's Halloween pants. And if you can't visualize what that looks like, just Google Buc-ee's Halloween pants and try not to scare yourself when your search results pop up. They're quite spooky. But here was my logic on the VIX, and it's very simple logic, right? Now here's kind of the additional wrinkle that I did not expect. The Hindenburg Omen triggered this week. Now I'm going to put this straight out there. I don't know enough about Hindenburg Omens to claim that they're going to do anything. Right? I know that the more that you start to see them, if you start to see clusters, that certainly means something. I think they have like a 30-day window for them to play out. So just the fact that that triggered alone doesn't really faze me because it's not something I deeply understand. I'm understanding it a little bit better, but I don't understand it that well. Nor do I particularly super care to, right? It's just a matter of fact. It's a data point. But when I combine that data point with this data point that I'm about to show you, and that frankly I've been showing you for a month, then it starts to get a little bit spicy. So I'm going to cover this in full one more time because I don't know if everybody always watches the video. Before I cover this VIX signal, which is probably going to be the key part of this video because, there's not a lot of nuance. Everything looks great. Pile it all into tech. Yes, you are super extended, control your risk, all of that stuff, of course. Don't go crazy with euphoria, control your risk. But in terms of combining data points and signals, this is probably the most interesting part of the video. So before I get to it, I'd like for you to drop us a like on the video and drop us a comment. If you have any questions, I've been going through with my own personal account and answering any questions, so drop us a comment. If you don't have anything to ask, just let us know what you're having for dinner or what you're dressing up for Halloween. Not to overdo the Buckies, but I'm going to be a giant Bucky for Halloween as well. So if you can drop us a comment and a like, it certainly helps the algorithm bless the video, which always helps. So here's the VIX signal. So you see how the VIX goes into these really long kind of reversal signals where the yellow bars start to print, and they're slowly kind of there's like this gradation back to the center line, right? See that? I used to call these smiles. I should probably just call them smiles because it's pretty easy to see it. You know, if I call it a smile, you see the smile here? And you see this giant smile here. So when I do it this way, I think it's a lot more obvious. So I'll probably just go this route going forward. And you see how now, after a month, the squeeze histogram here is actually completely flat. So I'm going to expand this because I think it's important. And I had been telling you to watch for this for Halloween, and here we are, and it's Halloween. And we are now completely, you see there's no more yellow bars. So where does that put us? That matches here, right? Now notice that this thing went 1 bar up, 2 bars up, 3 bars up, 4 bars up. VIX really didn't do anything. And then boom, right to 60, right? So this is my concern going into the end of the year. One is everyone is frothing at the mouth bullish. Two, the VIX signal here may not be identical. It may not repeat exactly, but I think it will rhyme. Certainly enough to get my attention. And so what does that mean? Well, if it follows the path before, that means that November could still start to print this higher, but there's actually no movement. And then sometime towards the end of November, beginning of December, the thing actually, does that and takes off. That would actually work in line with that Hindenburg Omen, and it's something that I can speak to a little bit more confidently than just one data point like an omen signal. So I want you to be very aware of this because I think it's important, right? We're trading at all-time highs, 3 ATR, everyone is giga bullish, trade deals left and right, NVIDIA is partnering with everybody. I got an email today saying NVIDIA is going to partner with me. My net worth immediately went up $3 billion. That's the market that we're in. So I want to not necessarily be a wet blanket, but I do want to show you that there is the potential for imminent, sharp risk in the near future in the VIX. So hopefully we'll have plenty of time to catch this before it happens. Ideally it doesn't happen on Monday, but very important signal, and it's a very easy signal because you don't even need my indicators for this one. You just need the squeeze histogram, which you probably have. Same thing here with the VVIX, right? So I already covered this in detail, but this just shows you the other side of the coin, and that is that VVIX is, think of VVIX as acceleration and VIX as velocity, so acceleration before velocity. But there's really not much to cover here. It's an identical conversation. So let's cover the net trade because we took an earnings trade here on net in the room. Got in at 270, got out at 550. It was a really clean chart, so I didn't think this was a very difficult trade to take. But more than anything, I just want to show you the strategy. And then because it's not helpful to you on the YouTube, if you're not a member already, you didn't see this trade. So the one thing that I will never do is flex a trade that you didn't take, right? There's an old saying in trading, no post, no boast. If I didn't get you into the trade, now if you're a member, you got the trade. But for those of you that are watching on YouTube for free, you didn't get a chance to see this trade, right? And I think it's cringe to come and brag about a trade that you didn't see. But allow me to be temporarily cringe, and then I'll show you the next trade that I'm looking at that's almost identical, which you can take because I'll share it with you today, and it's for next Friday. So with net here, the setup I think just speaks for itself, right? Like I don't think that there's a whole lot that needs to be said. You had a very clean kind of trading range here. You had bull slingshot, right? I love me a bull slingshot signal. You see, like this is the perfect signal right there. You see it? Squeeze, arrows, green bars, huge pop to the upside, right? We like that. Here's why I want to discuss it though. It's not so much like, oh, that was great. I want to discuss the strategy. So the strategy for this one was the 230, 240, 245 broken wing butterfly, right? So basically I'm selling 2 here, I'm buying 1 here, and I'm buying 1 of the 245s. Now, for those of you that are keen with your eye, before I even point this out, you might ask, well, notice it's asymmetric. It's 30 and 40 on one end, 30 and 40, that's 10, and 40 and 45 on the other, that's 5. So it's 10 on one side, 5 on the other. I do that on purpose because I want to not have upside risk, right? Had I done a 240 butterfly here, equidistant, I'm hosed. I probably don't make almost anything on this trade. Like I probably make like 30 cents instead of making a double. So break the wing in bull markets, right? Basically, don't give yourself risk in the direction of the trend, which is upside risk. But the key part here, again, I'll show you this in DDOG in a trade that you can check out yourself next week. The key part is that I undershot the expected move. So yesterday this thing was trading 230. The expected move was $20. Maybe a little bit more, but it was $20. So 230 plus 20, that puts you in 250, right? So I think a very common thing would be to put your butterfly at 250. Now, frankly, had I done a 250 butterfly, that's looking pretty sharp. But I don't have a crystal ball. So by undershooting the expected move, instead of using the 250, which is where the market thinks it's going to go, I use 240, but then I break the upper wing, I give myself no upside risk. And I give myself a lot more ways to win. So my trade wins basically from like 233 all the way to infinity, right? Assume that the top of this box is infinity. My trade wins everywhere in this box. I like that. I like to be able to win in a lot of different ways as opposed to just having to win by the stock going straight up or straight down. Let's take what we just talked about and let me show you the DDOG trade that I'm trying to get into for Monday. Now, I don't have an entry yet. I'm bidding 250 on this trade, and I'm going to verbalize it to you, and I'll let you know even the price that I'm trying to get it at. I'm trying to get it at 250. It's going to be the 160, 170, 175. So notice again, it's going to be a 10 on one end, 5 on the other. It's 160, 170, 175. This is again undershooting the expected move. So the expected move is more than $10, but I'm putting my center strike on the butterfly at 170. I'm using 160 as the long call, and then I'm using 175 as the upper wing. 10 on one side, 5 on the other, undershooting the expected move. To me, this setup looks a lot like net, and I'm going to play it almost identically to net because of that. So if you're interested in something like that, you'll have plenty of time on Monday to check it out. I'm bidding 250 on this trade, and I don't have a fill, and that's by design because I don't want to chase it today. But more than likely, I'll try to get this filled on Monday. And let's say that DDOG gets bought out by GameStop. A big baller like GameStop comes in and buys DDOG, and DDOG goes to $1 million. Well, this 250 debit on the butterfly turns into 5, right? Even if the stock is trading at $1 million, right? So I double it. In the event that it happens to stop at 170, the 250 debit turns into 10, right? And in the event that it's just kind of a dud and it does maybe nothing, maybe it goes into 165 or, wherever it happens to go, anywhere in this kind of box here, the trade would go out at 5 and it would still be a double. So basically, anywhere from 165 and above, the trade is a dub, right? It's a double. So look how big my box is when I can do that. So I wanted to spend a little bit of time on that one more so than anything because it's a strategy I've been doing a lot of lately. It's the broken wing, undershooting the expected move with a broken wing butterfly. It sounds complicated, but it really isn't. Hopefully the explanation was enough for you. So I'll come back next Friday, let you know how the DDOG trade went. Again, I would just reiterate, be very, very mindful of your risk, especially if you've had a big month, a big year, whatever it is. Just make sure that every day, every morning, you're tapped into your own thoughts and your own emotions, and make sure that you're grounded and that you're not euphoric. when there's potential for a very sharp signal. Maybe not next week, maybe not the week after, but there's something setting up within about a month. And I think you just have to be aware of that. So we covered that with the VIX signal, and we'll review all of this next week. All right, guys, that's my time. Also, before I leave the video, if you are interested in checking out these trades in real time, not just from myself, but from every better trader that's on the roster, there's a link down below in the video to check us out for a $7 trial. I think it's for a month. So $7 for a month. You know, if we can't make you money in a month for $7, then you can write us a mean letter. But I think it's absolutely worth checking us out. So come get a trial, simpler trading, $7 a month, right down below. And we hope to see you there. See you guys in the next Friday video. Cheers.